Something very interesting happened last week, and it has to do directly with the bond market and Trump's tariff policies. And it goes to show you how powerful the market can be when collective action is taken. And that is exactly what we're going to talk about here today. So, as always, my name is Derek, and I got my degree in finance, so you don't have to. Without further ado, let's dive right in. So, as I'm sure you're well aware by this point, Trump announced sweeping tariffs on April 2nd, which he coined Liberation Day. The first of those tariffs were to go into effect on April 5th. This was a 10% tariff across the board, but much steeper tariffs were set to go into effect on April 9th. And as I'm sure you're also aware, Trump, within 24 hours of those sweeping steep tariffs, paused the majority of them, except for those on China, for 90 days. And that brings us to the topic of today's video. Why did Trump pause the majority of those tariffs so quickly after they went into effect? Well, the answer lies in the bond market. Now, something specific happened last week in the bond market that is rare. As Trump implemented these tariffs, the chances or the odds of recession went up naturally, and the stock market reacted accordingly, dropping close to 15% in a single week. Now, the interesting thing that happened was in the bond market. Usually, when recession odds increase and people flee the stock market, where do they go? They go to the bond market. Now, this usually pushes bond prices up and brings the yield down because it is simply supply and demand. And the bond coupon rate does not change. So as more demand pushes bond prices up, the yield on those bonds on the secondary market come down. But that is not what happened last week. Not only did investors flee the stock market, but investors left the bond market in droves. And this, of course, did the opposite. It didn't cause bond prices to increase and yields to decrease. It caused bond prices to crash, which, due to their inverse relationship, caused bond yields to skyrocket. The 2-year Treasury, for example, saw the largest increase in over a decade. And the yields on both the 30-year Treasury and the 10-year Treasury skyrocketed as well, close to 50 basis points or 0.5%. This is usually unheard of, especially when it comes to the 10-year Treasury and the 2-year Treasury, which increased 30 basis points in a single day, the most since 2009. Now, that's all well and good, but how does this relate to the title of this video? How did the bond market defeat Trump? Well, Trump was relatively strong, even in the face of the stock market falling close to 15% in a single week. But that same resilience wasn't necessarily the case when the bond market started to collapse. Why? Well, because the bond market directly affects the US government and the current world order. When investors sell US Treasuries in massive quantities, it does two things. One, it shows an extreme lack of confidence in the US economy as well as the United States' ability to repay those bonds. And this, of course, causes the yields to increase, which makes government debt much more expensive to service. Remember, the US government not only has a $36+ trillion national debt, but it also has a close to $2 trillion per year deficit, which means it needs to issue these treasury bonds to be able to pay for things. When the yields on these bonds increase, it makes borrowing money, which means running a functioning government, significantly more expensive. It also makes servicing this debt much more expensive. Now, there are reports that individual investors were not the only people selling. Japan and China and Canada are also purported to have sold massive quantities. Now, was this to prop up their own currencies, or was this to punish the United States, or did this really even happen in the quantity that is being purported? I'm not sure. The point is, in my opinion, and of course the Trump administration's official explanation is different, but in my opinion, the bond market borderline collapsing was the primary reason that Donald Trump altered course so quickly. Now, while the administration has taken the official stance that this was part of the strategy and that it was more so the fact that dozens of countries called the White House to negotiate and plea for better trade deals to avoid the tariffs, in my opinion, that's probably just the public story. And we do have some evidence as well as literal testimony from Kevin Hassett, which is the director of the National Economic Council, which is one of Trump's main economic advisors, that the bond market was one of the primary reasons that Trump altered course. And we have other economists and financial experts like Larry Summers who share the same sentiment, saying that it was the unique and rare combination of both a stock market correction or borderline correction, as well as a flight from bonds that showed weakening sentiment when it comes to the safety of US assets. And the main takeaway for this video when it comes to the crazy last week we had economically is the fact that both the stock market and the bond market experienced declines, because this doesn't show a concern with recession like investors leaving the stock market and moving to safe havens like bonds. No, this instead signals a lack of confidence in US-based assets, primarily in US government-backed assets like Treasury bonds. This is, of course, rare, because if anyone on this planet is going to pay back their debt, it's most likely going to be the US government. And that's because the US government has never defaulted on its debt, except the couple of times that it kind of did. But officially, it never has. So to see investors fleeing the primary safe asset in the world for other Treasury bonds in other countries, like countries in the European Union, shows a significant lack of confidence for US-backed debt. And again, in my opinion, it was this, not the official story that's coming from the White House, that caused Trump, as well as his economic advisors, to pause tariffs within 24 hours of them going into effect. Now, of course, this is only a 90-day pause. We will have to see if Trump will extend it, cancel the tariffs completely, or if these tariffs will, in fact, go into effect in 90 days. But of course, in the meantime, the bond market has recovered, which means yields on US Treasuries have come down as demand for bonds have gone up, which keeps the current world order and the United States' ability to repay its debt relatively intact. I hope you found this video informative when it comes to not just how the bond market works, but how interconnected everything is, even when it comes to powerful governments like the United States. If you did, please consider subscribing. It helps the channel tremendously. And if you like personal finance, world economics, and investing broken down simply, you are in the right place. So I hope you stick around for the next video. Until then, I hope you have a fantastic rest of your day, and I will see you in the next one. Take care.